Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Thursday, the 18th of February, 2021, about 5:50 p.m. Central Time. So, TV taken up today with two events, obviously. The Mars landing, which was exciting as can be if you were watching that. I was certainly excited by it. We'll get to the point one time where we can actually see it land on the surface. Won't that be exciting as it occurs? They couldn't do that, but it was still very exciting, and it worked, and that's even better. Then, of course, the boring House hearing on Robinhood and Reddit and Citadel and Melvin Securities. I can go on and on. What a waste of time, in my opinion. Again, it's the way the questions are asked, what they're asking. Why don't they just say, why don't you plead guilty? That's basically how they ask the questions. It's not going to happen and accomplishes very little. That's what I have to say about it. I think they accomplished nothing in the jive. We're starting to see give back in some markets. Today was one of those days where when I started off at 8:40 recording this morning in my for the SPDR ETF paid subscriber video, I told people the market looks heavy. I think there's a problem today. And that's pretty much worked out. You were down in all of these. The gold was down as well. The pound was up. You got a little bit of a rally today in the euro. There's a new thing that we're following. This is the Bitcoin ETF. Now, it comes in two varieties. It's on the Toronto Stock Exchange. The reason there's no change, first day of trading. What are you changing the price from is a contract. So that won't be it, but it'll have its numbers tomorrow. You can either get a BTTC in the U, which is the U.S. currency, or I think it's B, if I'm correct, for the Canadian currency. I don't know why B for Canadian currency, but you can buy it one of two ways. It had a big first day. And what it'll do is that's related right to Bitcoin, so you have to buy the underlying futures contract. So very interesting as to how that works. They do. So that's another policy. I was in today the Ethereum part from the Chicago Mercantile for the futures. Wasn't overly impressed. It's going to still stay institutional. Margin's 45% of the contract value. There's 50 Ethereum coins. They're nearly 2,000 a piece. So it's $45,000 margin, 37% maintenance margin. I don't have clients that want to trade for that number. That'll be an institutional contract until the exchanges down the road do something. They're saying, well, options trading might be for clients, maybe. All right, so let's take a look at what happened today and go from there. Let's start off with PAVE, which we've been doing. Now, down the road here, I'll get rid of PAVE and put something else. But the market, as I said, we're into a serious resistance area. It had a bounce. It could be ready to pull back and consolidate a little bit. This is going to be predicated, the bigger move in this, on infrastructure. That's why I brought it back. And we know the Biden's administration wants to get the COVID through, then this. Janet Yellen today, I think it was CNBC that she had an interview on. She's all for the infrastructure. She's all for spending big. I mean, if you saw it, if not, go. They probably have it on their website. Take a look. What is the pattern on the chart? Well, it doesn't have one any longer. It stepped out of its uptrend when it took out today, 22.13. So in terms of the swing line, it went neutral. In terms of where the support is, I'd say it's back at the 18-day moving average of closes. In terms of resistance, it never did make it up to the upper Bollinger Band, so it fell short of that. It got up to what we call a window envelopes actually, and that's what stopped the market. I don't show all these studies here because they'd be confusing as can be on the chart for you. If you take the charting course, they make a lot of sense, and that's where I reinforce everything there in my SPDR videos in the morning. And momentum is overbought, could turn down when you reopen. See that? You didn't embed. I wouldn't be surprised if this market needs to do more work, but it's already set a statement. 2085 was too cheap. Maybe 22 plus is a little too expensive. We'll see what the market wants to do. Then as we're into the cannabis, first of all, it had its play. That's why you went up here. When you embedded and you lost, and I want to show you this. When you get an embedded reading, it's when the numbers are going sideways over 80 for several days or more. Got that? When it's lost, you often get a move that carries the market back towards or to the 18-day average of closes, or if the 100-day were in front of it, the 100. But in this case, it's the 18. This is what the market's been doing. So I can make that argument. That's where it wants to get back to restructure. We'll wait and see what it does. The trend is up. The bias is up. The market's momentum, though, is down. When you look at SMH, the semiconductors, well, the market's lost its potential to embed here. Not embedded today. Embedded, 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 not. So you got your third day and it lost it right away. And I mean right away. It wasn't a very good day for it. It opened lower. As I pointed out to my traders this morning, not the best place to come in. And because of how you close, it's hard to say if it can regain it tomorrow. If you close with both numbers over 80, it would. So you've got to wait and see what that does. You know, and I like the semiconductors. It just might be ready to give you a little pullback. In XLI, the service sector spider, you're still with an embedded reading. So that rules the chart. Until that red line's under 80, I contend the pros are buying this market on these pullbacks, still looking to get up to 91.79. Lose the embedded reading, and I think they go, boom, I want out, and they'll look for the market at 88.28. Energy sector, how high is high enough before you want to take money off the table? Well, you've been up 2 days in a row at the upper Bollinger Band. What do I teach you when you hit an upper Bollinger Band? Take money off the table. You decide how much. But if you think that's a spot to add, and if you think that that's an area you shouldn't take money off the table, wrong. I think that is an area that I teach, at least, that that's how it should be done. Because staying over it, and this is the logic, you only do it 5% of the time. So I know you're going to play that this is going to be one of them, and sometimes it happens. I don't want to be there. There's not enough of them to make that make sense. Give you an idea. Mexico has been doing a way of hedging in their oil since 2001. And today I read a statistic on it that blew me away. In the years when oil's collapsed, they've certainly done well. In years when it's gone up, they haven't done so well. They were doing it and getting all their hedging done and letting the market know they're putting on all their hedges for the year by November. So the market would follow what they're doing. They weren't doing it piecemeal. They got to have it done. Why would they do that? They had spent $15 billion plus doing it over that period of time in the cost. They only got back $16 billion. Wow. Not a very good play, $1 billion over that period of time. So they decided to do what airlines do, what U.S. shale producers do. They're going to follow a technique, they'll develop it, where they hedge as the price is going up and down, not based on time. Gee, price. I'm glad they woke up, but how hard is that to do? Wish I'd been a consultant on that and got a fee. Lower low, higher high. You can see how you're pulling back here. Okay, you are embedded. We'll see how the market does. But I'm always nervous when you get an event that's based on a weather event, that the weather's changing. And the oil didn't go away. It's not there right now, but it's going to come back. I don't know how much damage is done to the pipelines and so on. Things you have to always watch. I think the smart money's taking some money off the table. In QQQ, I look at the red line, finished at 82, but you're down here to the point where when you open, you've got to be up right away. If you're not and that thing slips under 80, be careful. You got a lot of resistance above you. The market's gone back to its neutral number. It wasn't in a trend. It is still embedded. So I think the pros did not come out yet. They need to have an update tomorrow to stay with the market. EFA, same way. So the market fell back. I think today was the buy day for a lot of those pros. We'll see if the slow stochastic hangs on. If it doesn't and it closes under 79, I think the traders will throw in the towel looking for a pullback here. If it can stay up there, you'll know. Take a look. You close near the high of the day, so obviously if you make higher highs right off the bat, one of the things you might want to be looking at is don't take out today's low of 75.49 if you want to hold on to the momentum. In the gold, the one thing I teach is you hit a Bollinger Band, you have a trailing stop at the most of the time. I tell traders just come out. Now you're starting to get your spin arounds down here. Be careful. You're oversold. You're back into an area that's a support zone that you've seen before. Why press it? Gold miners, you're under the Bollinger Band. You're oversold. Why press it? You're back into the support you had back here. Slightly under it right now, because here you were closer to, what, 33. Now you're pressing 32. I told you can't be long in both my subscriber video and this, but I've not told you to be short. Why couldn't you be long? You didn't have the pattern. You've been under the 18-day average. That doesn't mean I'm guiding your money. Can't be long means where's the bias of the market. When it's down, I teach. You should not be long the market. TLT. I saw this rally coming. Yesterday I had told in my subscriber video to go short on that rally and missed it by a penny. And the objective was getting back to the Bollinger Band. You miss a trade, that's life. I'll miss a lot of them in my life. Here's interesting part. If you can get back over 113.71, you negate this short downtrend that you've had in the market. Momentum has stopped pointing down. It's flattened out. The trend is down. I think the pros went short today at 113.43. I think their stop's going to be 28-29 cents higher at 113.72. I don't think that's a buy signal. I think it would be a reason to come out of shorts. If they don't get stopped out, the potential's there for the 112.61 level, the 100-day average of closes. Not an exciting trade, but it's there. And that's what I see on the charts right now. Now, if you like what I talk about here, do you understand it? If you don't, there's a simplistic way to get it. We have Guide to Technical Indicators, volumes 1 and 2, that give you the examples of the market, these strategies, what they are, how to apply them from moving averages to slow stochastic, relative strength, market sentiment, chart patterns, what is a contango spread, what about some of the Dow theories, the Elliott wave, other parts. It's all there. How do you get this? It's simple. All you need to do is go to our website. You can even hide behind that. It's under free offers on the bottom right. Fill out the form. We'll get it right to you. And there's other offers there for you. Take advantage of them. I'm Ira Epstein. You have a great day. I will talk to you all tomorrow.